Welcome, ladies and gentlemen, to Commodity TV. Today, I would like to introduce you to a new gold company called Mayfair Gold. Therefore, this video is produced and paid for on behalf of Mayfair Gold. When efficiency and cost discipline meet high-grade potential, great structures and strategy, it can only be Mayfair Gold and its Canadian gold project Fenn-Gib. Fenn-Gib is located in the high-grade Timmins District in Ontario, one of Canada's most attractive and productive gold hotspots with a historical gold production of over 100 million ounces. The quality of the location is also underpinned by its proximity to active mine projects complexes, including Discovery Silver's Porcupine project, and its proximity to established producers such as Agnico Eagle and McEwen Mining. This also speaks in favor of Ontario, which ranks fourth in the Investment Attractiveness Index of Canada. In addition, the project is well integrated into existing infrastructure, particularly with excellent access via Highway 101, a power grid within 10 kilometers, and regional mining services. In addition to these excellent geographical coordinates, Fenn-Gib also has great economic potential. This is based on the pre-feasibility study published in January this year in 2026. In the base case scenario, assuming a gold price of just $3,100 per ounce and a conversion factor of 1.35 Canadian to $1, the PFS shows the following key figures among others. Mineral reserve, 1 million ounces of gold, average throughput of 4,800 tons per day with an average LOM grade of 1.29 gram gold per ton, and in the first 6 years, average of over 71,000 ounces of gold per year at 1.47 gram golds per ton. The after-tax NPV is 652 million Canadians, the internal rate of return, the IRR, 24%, and the payback period, 2.7 years. The average LOM AISC costs is about $1,292 per ounce, and the initial capex is 450 million Canadians. The bottom line is that over the entire term of the project, this results in a cumulative free cash flow of around 1.7 billion Canadian dollars, averaging approximately 114 million Canadian dollars per year. It is particularly noteworthy that the remaining 2.3 million indicated ounces of gold have not yet been included in the preliminary feasibility study, and for good strategic reasons. Then, Mayfair Gold is deliberately focusing initially only on higher grade, near surface material and on provincial level approvals. These are expected in just 2 to 3 years. The result of this approach? Minimized construction risk, optimized financing through lower capital requirements, and rapid free cash flow in this exciting gold cycle, and a potential revaluation resulting in reinvestment opportunities and promising growth initiatives. Speaking of growth prospects and scaling potential, based on a more realistic gold price at around $4,450 per ounce in the PFS, then the net present value reached nearly 1.4 billion Canadian dollars, an increase of over 100%. Annual free cash flow more than doubles to 238 million Canadians in the first 6 years of operation. The initial rate of return increased to 38%, and the payback period is shortened by exactly 1 year. In addition, mineralization at Fenn-Gib remains open at depth and along strike. Furthermore, additional mineralized zone may exist in the North Block outside of Barrick's repurchase rights. The largely unexplored South Block along the high-grade Porcupine Destor Fault also offers further exploration potential. Mayfair Gold is currently continuing a reverse circulating drilling program that has already begun within the defined near-surface high-grade mineralization zone at Fenn-Gib. The results will be used to finalize the mine design, more accurately define high-grade zones, and thereby reduce risk in the early years of operation. Overall, Mayfair Gold has clearly defined its roadmap towards a construction decision. This also applies to its shareholder base and management. With Muddy Waters, Hine Capital, Oaktree and Westcore, Mayfair Gold has a solid base of growth-oriented investors. The tight share structure and a strong management and insider shareholding of 35% underscore Mayfair Gold's clear focus on long-term value creation. Mayfair's president and CEO Nick Campbell and COO Drew Anwill are both deeply rooted in the mining industry. They have been very successful in developing high-quality gold deposits and positioning comparable high-potential projects such as Fenn-Gib for long-term growth on capital market. Pierre Baudouin, an experienced strategic advisor, was also recently appointed. As COO of Silvercrest Metals, he was responsible for the technical studies, construction and commissioning of the million-ounce Las Chispas mine in Mexico, which was completed ahead of schedule and under budget despite the pandemic. Baudouin also served as CEO of Detour Gold Corporation, among other roles. The Detour Lake mine is Canada's largest producing mine with the country's largest gold reserves. Baudouin's technical and strategic expertise will play an important role in Fenn-Gib's journey from approval to production and strengthen Mayfair's position in realizing its vision of becoming Canada's next gold producer. Mayfair Gold is developing Fenn-Gib, a high-grade gold project in Canada's gold hotspot, the Timmins District, via a short approval process at the provincial level and with a clear focus on rapidly generating free cash flow. In addition, Fenn-Gib has promising exploration and scaling potential. The current market capitalization of just around 350 to 400 million Canadians therefore is no way reflects the development value of Mayfair Gold. This is all the more true given that Mayfair's visibility has been significantly improved and trading has been made much easier for US investors with its recent listing on the NYSE under the symbol MINE, mine. What a great symbol. This creates an opportunity for greater liquidity, especially for companies like Mayfair, which are in the midst of transforming from exploration to development and production. Ultimately, this will enable the next phase of growth to be achieved even faster. You can also find all the information on our Commodity TV app in German and English, along with everything you need to know about commodities. Please note the disclaimer displayed. The stock discussed is or will be part of the SRC Mining Special Situation Certificate, and SRC AG and/or SRC employees may hold shares in the company. Thanks for watching us, and bye-bye here from Switzerland.